Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 2nd of March 2017 and the trap we're going to look at is what I call a trap break pullback, which has occurred in and around this area here. And what this trap is when you have a level of resistance where prices come up to it and shied away from it, and a minimum of 2 times, you're set, you're good to go. And what essentially this trap is doing, how it's catching people, is people believe that the level is going to hold. That's what gets them involved in the trade. So first and foremost, they look at the level and they are interested in the level, okay, because it's obvious, nice and clear, they can see it. The next thing, however, is that the level starts to react as if we're going to make some money, right? It's very similar. This looks very similar when price comes into the level in here, as it did in here, as it did in here when it made money, right? So when you're faced with a decision to make and you're at the hard right edge of the chart, of course that's very enticing, right? You believe that that's showing you, it's confirmation that your analysis was right, so you then jump in, take some risk. But of course, no sooner did you do that, the market's gone strongly against you. Now the stock market's rallying, oil's falling this morning, but the stock market's just pulling back a little bit. So this looks like a great place to get long. Just keep an eye on the stock market. You want to see it start rallying, oil to remain soft. But those traders who are essentially in here, who sold off resistance and are trapped, will bail out of those losing positions at break even if they get the chance, right? Break even being the second best trade in the book. If they cancel the stop as it comes back in, they can't believe the luck, they'll exit, and that creates demand. And it's forced buying, right? Forced buying. When we're talking about buying and selling in the financial markets, not many people ever describe it as a forced buy or a forced sell, but it's true. There's a lot of forced buying and selling going on in the financial markets because people are forced to bail out of a trade at break even. People are forced to close a trade down that's losing. People are forced when their stop loss gets triggered, right? It's automatic, but it's still a forced buy or sell order. These are all different types of buying and selling that occur, and by understanding that, you can get a grasp on these little pockets of volume that exist where not very many people understand that there should be buying and selling occurring in these areas, because it's not in your stereotypical level of support or resistance. It can happen all over the chart. It's a dynamic situation. But if you can understand why traders are taking trades, what it does is it gives you that perspective, and from that perspective you can see where traders took trades. Also you can see where they made money, but you can also see where they lost money, and that's what I'm interested in. So, you know, for the last 13-14 years I've been reverse engineering these concepts and hacking the trading strategies of the vast majority. And if you'd like to get on the right side of that equation, come and join me in my inner circle. Click the link below, and I'll see you on the inside.